Hello, everybody. Here we are. Another weekly Thursday thoughts. I'm excited. I hope you're excited. This is going to be your weekly rundown of all things financial. And hopefully, there's not too much drama or bias. I'm going to give you some news points this week, some data points I think that are pertinent, some of the stuff we touched on in the Monday Morning Minute. We are going to take a few questions, and then I want y'all to stick around for the final thought because I am going in hot. I am coming after Congress today. They're really irritating me right now. So stick around to the end so you can hear that. I think it'll be entertaining. If you have questions, please shoot those over to info@cfgfinancialplanning.com. I hope you have your beverage in hand because we're about to get started. All right, let's get into some data. We had some important data this week, but I don't think anything was more important than the jobless claims. I mean, I bring these up literally every week, so we're going to start off with these from now on, at least for the foreseeable future. From my perspective, there isn't anything more important than what's happening in jobs right now. And I'm going to pop a chart up here for you guys. It is pretty darn interesting, I think. And what we got is we have orange. We have the orange line. This is showing our continuing claims. That number continuing to go up tells us one thing and one thing only, and that is that people are not getting rehired. We're going to get some more data on that fresh tomorrow, but continue to see, or I expect this chart to continue to move north, which is bad. It's nice that the rate of jobless, new jobless claims in blue has gone down just a little bit. But I think the most important thing to point out here is that we are all the way back at 1998 levels of jobs. Think about that for a second. We have literally lost every job that's been created since the tech bubble was finally going to its biggest, bubbliest amount. From my perspective, there are some positives. Tiny little piece of good news is job losses have decelerated appreciably in Florida, Georgia, and Alabama. So that's good. I don't think it's a coincidence that those are three of the more flexible states in terms of their reopening. Regardless of where you stand on reopening, I mean, you guys heard what I thought about that last week. If you missed that, go watch that video from last week because I was not super kind in my thoughts about that. But they are seeing a little bit better jobs data because they are not quite as stringent with their requirements for businesses to reopen. So it is what it is. Next up on the list, we have non-farm productivity. This is a pretty overlooked metric. I think it's important because it shows how much productivity employers are getting out of their employees. Consensus was thinking we were going to see somewhere around a 5 or 6% decline on this. We only saw 2.5%. And all this really means is that fewer people are doing the same amount of work. Or at least a similar amount of work, right? I think this should make sense considering the massive layoffs that we've seen over the last 7 weeks. I mean, it makes sense to me that there are still quite a few businesses out there running, still selling stuff online or otherwise, and they've had to lay some people off just to be safe in terms of preparing for this economic downturn. And the people that are on or still working are getting paid a little bit more because they're working a lot more and they're doing a lot more. So before I go any further, I do want to touch on something I think is pretty important because I have a tendency to talk in like fancy financial terms and whatever. When I say expectations or the word consensus, I'm referring to Wall Street or in simpler terms, the really big firms. They're just trying to predict what's going to happen. And ironically, they're right almost never. But I still want to use that as an expectation that we're trying to measure against when we get the real data. That way we have an idea of what the market's trying to price in at any given time. So the last data point we're going to cover kind of ties in nicely with the more work for fewer people narrative, and that is compensation. Um, so that's a pretty cool chart here. It's going up, right? I guess if we're using fancy technical terms, this would be called unit labor cost. The long and the short of this is we have the same-ish amount of work and fewer workers to do it, which equals higher cost per worker, right? I think this makes sense. Expectations were, or consensus expectations, right? We're expecting about 4.5% of an increase. The actual number was more like 4.8%, or about 7% higher than what all the Wall Street geniuses were expecting. Realistically, I think the PPP requirements may be a major contributing factor to this, because business owners have to use at least 75% of their respective loans in a 2-month window. To get these loans forgiven, essentially. All this really means to the market is that people are likely to have a little less money to spend towards the end of the summer after these loans are forgiven. It'll probably affect consumer discretionary spending a little bit, and also consumer discretionary companies, right? So it's now time for the news. Big news, the biggest, hugest news. I try to water this thing down to, or dilute this, or whatever you want to call it, down to the 3 or 4 most important news pieces of the week. So we got a couple of them. First is going to be the cowbell. We need more cowbell. Lots and lots of cowbell. Now, what I mean by that is Congress is passing another phase of massive, huge stimulus. There's a rant forthcoming on this, but you're going to have to wait, because that's at the end, and this is the news. So no ranting during the news. One part of the stimulus that I think is really, really interesting, though, and one that I'm a little more comfortable with, is the fact that there could be short-term raises for essential workers. If you guys haven't seen this, this is pretty cool. The Senate and the House are really, really far apart right now on how much of a raise is warranted for these folks. But I think they agree, and most Americans agree, that there should be some kind of hazard pay for frontline workers. Most of us that are still employed are sitting in our homes behind a laptop, far, far away from Mr. COVID. That's myself included. And I agree that the unit cost of essential labor should and will go up. I mean, these people are underpaid, because they do all the stuff that we either are too scared to do or don't have the skill set to do. Perfect segue, right? I got COVID cases. Haven't talked about this for a while. I mean, I wrote an entire article on this a month ago, and I've been a little lax on showing you guys coronavirus charts. So here you go. Boom, chart. Love it. So about that curve thing that everybody's talking about. Yeah. So when they say they want the curve to flatten before we get to stage 1 of reopening, that means they want the curve to go like this, right? That would be flattening. And currently it's kind of like this, which is not flattening. So I don't know. Hey, it's the news. I'm just reporting it. Facts, right? That's what we do. No CNN, no Fox stuff here. Not trying to spin it. Curve like this, not like this. So whatever. Do what you want with that. Next up, we got oil. Ooh, boy. Still so bad. It is the worst. I mean, almost the worst. Congress is worst. But oil is really bad. Oil prices have bounced a lot. You guys have probably seen that if you've been tracking any of this stuff. We talked about the crazy negative futures price on oil back for the May delivery. Not sure what's going to happen for the June delivery, because storage is still full and we're still pumping and consumption's still down. But we are working on cutting production, right? And this chart, I think, is going to give you a pretty crystal clear picture on how much production is being cut in the United States. Yeah, so active drilling rigs in the U.S. have been cut in half Mm-hmm. 7 weeks, half gone. Went from like 690-ish to 325. That is a lot. That is a ton of rigs coming offline. I mean, heck, Canada's only down to 26 or 27 total rigs in their entire country. So North America is not producing nearly as much oil as we once were before, as they say. And from my perspective, I think that active drilling rigs are a great window into what's going on in the oil business. And for proven reserves to be worth more, oil needs to stay in the ground, which is why people are not drilling. These companies are going to go out of business. They're going to file for bankruptcy. And if they want to sell off their assets, the assets can't be getting pumped. They need to be in the ground. So that's the long and the short of that. Now it is time for questions. This is always a good segment, I think. All right, let's see. First question we have is, okay, so it's pretty good. Every week on your Monday video, you say to watch out for the jobs data on Thursday. And every week the jobs data is bad. Why does it always seem like the market goes up on Thursdays? Hey, so this is a bad news is more cowbell answer. I think the market in general is seeing, holy cow, every single time this jobs data is worse than the consensus is expecting. There's a higher probability that the Fed's going to print money or they're going to send you checks, right? You're going to get checks in your mailbox when there's bad data, or at least the probability of getting checks goes up when the data is bad. I'm going to get into that in much more detail here in about 2 minutes. So that's the long and the short of that answer. I mean, I don't have anything else to explain. I mean, bad news is good for the market when the equation ultimately ends in additional stimulus. Second question is kind of funny. It's, how do you pronounce Elon Musk's kid's name? I'm not going to try to say it, so I'm going to show you a picture of this. Let's see. Yeah. So the answer to that is I don't know. I have absolutely no idea how to pronounce that. Maybe Google knows. I don't know. Sorry, guys. Don't have a clue. Yeah, I'm not sure what that is. I don't even know what that symbol is. I probably should have looked it up before I did this today, so I could have something better for you, but I don't have a clue. So since I couldn't answer that one, I'm going to do another one. I think we normally do like 2 per week, but you get a bonus question because I had nothing for you on Elon Musk's child's name. All right, let's do this one here. With the country reopening, why should we be concerned with the jobless claims when everybody is just going to get rehired? Well, the short answer to that is everybody's not going to get rehired. There's been permanent destruction of capital. There are, I don't even know how many thousands of restaurants that have closed and are not going to reopen. It just doesn't make financial sense for them. They've lost their financial backing. I mean, the margins were razor thin beforehand, and now it's over, right? I mean, there's bankruptcies left and right. If this is anything like 2008, and so far the numbers would suggest it's going to be worse than that on a relative basis. The jobless numbers are real, right? And like I said on the news last week and the week before that, I mean, the bottom line is it's easier to fire people than it is to hire people. And people are going to be on the government cheese with these huge bonuses coming from the federal government for at least through July. And with that being the case, people don't really want to go back to work. I mean, maybe they want to, but why would you go back to work and make less money than when you weren't working? I don't know. Of course, these numbers are going to come down a little bit when the market or the country as a whole reopens. But there's a lot of uncertainty, and business owners are learning new ways to be efficient and work remotely. And they realize they maybe don't need quite as many people. Maybe they don't need quite as much office space. I mean, there's a lot of answers to this question that all end in the same place, and that is not everybody's going to get their job back. full stop. So with that, I want to get into the final thought. I mean, I keep teasing this, right? Yeah, Congress is the worst. Sorry, that was awful. But the bottom line is, yeah, they're the worst. I am a free market capitalist. That is a fact. Okay, that's who I am at my core. All the research I've been doing over the last decade assumes a free market, right? It thinks, or every piece of fundamental data that I go through assumes that people aren't going to break the rules and cheat, and that the government isn't going to get all up in our business. But that's just not the case, right? I mean, government intervention is literally everywhere. It's pervasive, right? And it does not perpetuate markets being free. Here's an example. I mean, the PPP loans, right? They're going to unnamed, ultra high-end, really expensive steakhouse chains. What is that? I mean, that's infuriating, right? And I don't even know how to handle that, frankly. I'm trying not to get too frustrated because this has to get through compliance, right? While the misappropriation of these loans is super duper irritating, at least the money is likely to make itself back into the economy. I mean, it should, right? People get paid, then people spend. This new round of stimulus is really what's irritating me. I mean, it is ridiculous. I'm not talking about the bonuses for hazard pay for essential workers. We're all on the same page. That makes sense, right? But I'm going to drop a couple of data points on you guys right now, and I'm going to go through the 3 new acts that have been proposed in Congress. I'm going to give you a little synopsis of what they say they're supposed to be doing, and then we're going to break it down a little bit. First and foremost, the big one in the news, if you guys have been following it, is called the Emergency Money for People Act. This is a quote here. It aims to provide $2,000 of monthly stimulus check to single taxpayers, and $4,000 for married couples for up to 1 year. Yeah, and if you have kids, you get a $500 bonus for each one of those kids. This is monthly. They're talking about. Check out this part. This applies to any married couple making less than $260,000 a year. Are you kidding me? Whew. Okay. Next on the list, it's called the Getting Back to Work Act. This would provide for a refundable payroll tax rebate that would cover up to 80% of employer payroll costs applicable up to the median wage. The goal with this proposal is not necessarily to put a stimulus check in people's pocket, but to somehow find a way to aggressively stimulate businesses. So we're going to take a big ol' axe to taxes that fund Social Security and Medicare, which are comically underfunded already, with the hope of stimulating jobs to then hopefully at some point in time pay more taxes, theoretically, in the future to try to make up for all the lost taxes that weren't paid. So that's cool. The last one is probably my favorite. It's called the Rent and Mortgage Cancellation Act. Yeah, delete. So the deal here is rent or mortgage payments would be canceled for a person's primary residence for 1 whole year with no negative marks going on your credit history. So now the federal government is going to take over the credit reporting agencies. That should be interesting. And then they're saying that a fund's going to be established by the Department of Housing and Urban Development to try to pay landlords and mortgage holders to help offset some of the losses. Whatever. Cool. So I guess having rental properties is an atrocious idea now based off of this because you just don't get paid and there's nothing anybody can do about it. All right, so let's do an overview of this whole deal just so we can get like a big picture of why this is such a dumpster fire. All right, here we go. On top of the $2,400 a month of additional government funding for your unemployment benefits, right? So if you're unemployed, you get unemployment benefits, then you get an extra $2,400 a month, all right? You're going to get a random check above and beyond all that stuff for about $5,000 per month if you're married and you have 2 kids. Now, even if you're not unemployed getting that extra government stimulus and you still have your job, you're still getting an extra $5,000 a month. I mean, where is this money coming from? Okay, anyway, this all sounds cool, and all you have to do pretty much is just look at Saudi Arabia for ideas on how you're going to keep your populace in check. It's called send them checks, all the checks, all the time. Give them all the money, nobody's going to argue with you. Superpower government. It's crazy. I mean, back in the good old days, if you were going to be on a steady diet of the government cheese, you'd be living in a van down by the river. If you don't know what that is, you have to Google that exact quote right now and watch that SNL segment. Now you can get all the government cheese while you're sitting on your leather couch in your $500,000 house with your 2 nice cars in your garage. And you can use all your extra time off, 12 extra months of bonuses to plan super cheap vacations to Florida or somewhere nice with $11 flights on Frontier Airlines. What is that? Super bonuses, no matter what's happening, all the time. I mean, you might get mad at me for saying this, but from a strictly financial perspective, maybe the coronavirus wasn't so bad for the economy after all. This is getting weird. All right, everyone. I really appreciate you guys watching. It means a lot to me. It truly does. And I want to do a special shout out to our awesome viewers in Panama. That's pretty cool. I love that you guys want to spend your happy hour on Thursday listening to this bald guy share his thoughts. And it's exciting. I like this platform, and I hope you guys keep tuning in. I really want to remind you guys right now, like and subscribe right here so you don't miss any of our videos. And until next week, cheers. Thanks so much, guys.